Picture this. It's 1941. The world is on the brink of global war, and an 11-year-old boy in a quiet Nebraska town scrapes together every penny from odd jobs to make his first stock market plunge. That boy? Warren Buffett, who would one day become one of the richest people alive. But this isn't the polished success story you know. It's the untold tale of near disaster, sleepless nights, and a pivotal mistake that shaped his entire philosophy on smart living and investing. We'll dive deep into the historical context, personal struggles, and timeless lessons from this forgotten chapter. If you've ever wondered how ordinary beginnings lead to extraordinary wealth, or how one small decision can echo through a lifetime, this is for you. Stick around and let's unravel the story that started it all. Don't forget to like, subscribe, and hit the bell for more smart living inspirations. Chapter 1. Roots in the Great Depression, A Boy's Early Hustles. To truly understand Warren Buffett's first investment, we must go back to his roots. Born on August 30, 1930 in Omaha, Nebraska, Warren entered a world still reeling from the 1929 stock market crash. The Great Depression gripped America. Unemployment soared to 25%, banks failed, and families like the Buffetts faced uncertainty. Warren's father, Howard Buffett, was a stockbroker turned U.S. congressman, instilling in his son a fascination with numbers and markets from a young age. But Howard's own losses in the crash taught Warren early about financial fragility. As a child, Warren didn't just observe, he acted. At age 6, he bought 6 packs of Coca-Cola from his grandfather's grocery store for 25 cents and resold them door to door for a nickel each, pocketing profits. This wasn't play, it was survival instinct in tough times. By age 7, he was waking at dawn to deliver 500 copies of the Washington Post, braving snow and rain for $175 a month, a sum that rivaled adult wages. But Warren's hustles went beyond papers. He collected and sold used golf balls from local courses, ran a pinball machine business in barbershops, starting with one machine bought for $25, expanding to several for $1,200 in profits, and even filed his first tax return at 13, deducting his bicycle as a business expense. These ventures amassed him nearly $2,000 by age 15, equivalent to about $30,000 today. The untold layer? These weren't random kid jobs. They built his core belief in compound growth and frugality. In an era of scarcity, Warren learned that smart living meant turning small actions into big gains, setting the stage for his bold entry into stocks.
Chapter 2. The World at War, Setting the Stage for a Bold Move. By 1941, the shadows of World War II loomed large. Europe was engulfed in conflict, and America teetered on the edge after Japan's attack on Pearl Harbor in December. The U.S. economy shifted to war production, but markets were volatile. The Dow Jones had plummeted 50% from its pre-depression highs, and uncertainty bred fear among investors. Oil and utility companies like City Service, now Citgo, were hit hard by rationing and global disruptions. Amid this, 11-year-old Warren, inspired by his father's brokerage and books like 1,000 Ways to Make $1,000, saw opportunity. He had already visited the New York Stock Exchange at age 10 during a family trip, gazing in awe at the trading floor. Back home, he pored over stock tables in newspapers, calculating values like a mini analyst. The untold context, Warren's family discussions around the dinner table often centered on markets, with Howard sharing stories of boom and bust. This environment fueled Warren's confidence, or perhaps overconfidence, to dip into his savings. Little did he know, the global storm would test his resolve in ways no book could prepare him for.
Chapter 3. The Investment Saga, Triumph, Turmoil, and Regret.
Spring 1942, Warren, with $120 from his hustles and pooling some with his sister Doris, bought 3 shares of City Service Preferred at $38 each, totaling $114. Why this stock? It was a stable utility company paying dividends, seeming like a safe bet in unstable times. He purchased through his father's brokerage, feeling like a real investor. But the untold drama unfolded quickly. As WW2 escalated, oil shortages and wartime regulations hammered City's service. The stock plunged to $27 per share. Warren, watching helplessly, endured taunts from his sister and sleepless nights regretting his choice. "I was miserable," he later recalled. And at panic, when it rebounded slightly to $40, he sold, netting a tiny $5 profit after commissions. Heartbreak followed. Within months, the stock soared to $202 as the war economy stabilized. Warren's mistake cost him over $500 in potential gains, a fortune for a kid. This saga, rarely detailed in biographies, highlights the emotional toll. It wasn't just money lost, but confidence shaken. Yet, in hindsight, Buffett credits this as his best lesson, vowing never to sell prematurely again. The market's wartime volatility mirrored life's unpredictability, teaching him resilience in the face of global chaos.
Chapter 4. Echoes Through a Lifetime, From Mistake to Mastery. The ripples of that first investment extended far beyond 1942. It fueled Warren's hunger for knowledge, leading him to study under Benjamin Graham at Columbia University in 1950. Graham's value investing, buying undervalued assets and holding patiently, echoed the City Service lesson. In his career, this manifested in buys like Coca-Cola, held since 1988, and Apple, amassing billions through long-term holds. At Berkshire Hathaway, acquired in 1965, he applied the same patience, turning a textile mill into an $800 billion conglomerate. The untold influence? Buffett's frugal lifestyle, still living in his $31,500 Omaha home, stems from those early scarcity days. He donates 99% of his wealth, proving smart living is about impact, not extravagance. Modern investors can apply this. Start small, embrace mistakes as teachers, and let time compound your efforts. Conclusion and call to action. Warren Buffett's first investment wasn't a triumph. It was a trial by fire that forged unbreakable wisdom. From Depression-era hustles to wartime regrets, this untold story shows how smart living turns setbacks into stepping stones. In today's volatile world, his lessons remind us, patience pays, knowledge compounds, and true wealth starts with one bold step. What's your untold investment story or smart living tip? Share in the comments. If this deep dive inspired you, like, subscribe, and notify for more. Explore our playlist on billionaire origins. Thanks for joining. Live smart and invest wisely.